So last week I met with the vice president of Pioneer Title Company to talk about foreclosures, and I thought he had some interesting insights on where he thinks the market is headed in the coming months. So in this video, I wanted to share that conversation with you.
What do you kind of see happening in the foreclosure realm?
Sure. Well, I think there's a big difference between 2008 foreclosure crisis and today, and we are by no means in a foreclosure crisis today. 2008, there was way more speculation. There was a lot. The underwriting standards on some of the loans that were being given are dramatically different than what they are today. So, having said that, there will be some foreclosures, and since they have lifted the moratorium, we have seen more foreclosure starts, and that's simply the notice of default and some of the required due process notifications that have to go out. But in a appreciating market, which we've seen over the last couple of years, if somebody truly is behind on their mortgage and for whatever reason they can't cure it, they can't modify it, they likely have the opportunity to simply sell the home. I mean, there's enough appreciation there, they can sell the home, pay off their lender, and maybe pocket some equity. So while we're seeing a slight uptick in foreclosure starts, I don't expect them to go to sale. I think they'll be cured before sale. If you fast forward, another year, if rates continue to go up and inflationary pressure continues to hit consumers, maybe the job market takes a bit of a breather, that's going to put additional pressure on consumers. And at that point in time, foreclosures might start going to sale. And the risk there is as they go to sale, that's just additional inventory that's going to eventually come back on the market that could affect top-line market value.
When they had this eviction moratorium across the United States, wasn't it?
It was federal, yes.
Did foreclosures basically go down to zero?
Yeah.
I mean, basically you couldn't get evicted, so you couldn't foreclose on a house.
If it was a federally related mortgage, then yeah, it virtually went to zero. There were still some private loans out there and commercial loans, agricultural, that we still processed foreclosure work on, but by and large, the residential stuff involving a federally related mortgage went to zero.
So when you say that there's been an uptick in foreclosures, you have to put that into perspective because You're coming from zero, actually, now back up to sort of a pretty historically low percentage of foreclosures that we're seeing.
Historically low. The notice of defaults that are being recorded today is it's a very low amount.
Right. And so if I'm understanding it correctly, what led to this whole financial crisis in 2009 was sort of this one element was the foreclosure, this massive wave of foreclosures that we saw throughout the country. That just drives the prices down, which sort of led to the collapse, kind of this whole real estate market. So it seems to me like we're in a pretty different position now than we were back in 2008.
I would agree. The fundamentals are very different.
Yeah.
And the lending standards has been very good. I mean, the lending standards are pretty tight. People have more equity invested in the property.
And I can certainly attest to the lending standards. I mean, I have clients right now that it's been about a month or so that they're trying to get pre-approved even.
Sure.
And it's like, that's a long time to try and get pre-approved. It's not even gone to the underwriter yet.
Yeah.
So
I think the fundamentals of the lender being able to repay the loan are intact. But foreclosures have been around a long time. There's always kind of death, divorce, medical hardship, things that affect the consumer's life. But I don't expect a crushing wave of foreclosures, certainly not like what we saw before. I just think we'll see a gradual increase, and then we'll see where the market stabilizes.
Yeah. What have you seen just with the rising rates, interest rates? Have you guys seen a pretty significant reduction in volume over the past month or two?
Yeah, on the title and escrow side of the business, we have, just because we rely, we don't rely on, some of our product mix is refinances.
All right.
And, why refinance at 5% if you just locked in at 3%?
Right.
So, the refi activity has slowed down dramatically, and it will continue to. I think the Mortgage Bankers Association put something out yesterday that mortgage applications are off too. If you can barely afford a house at 3.5%, you darn sure can't afford it at 5%.
I just read an article the other day that said if you look at the median house prices across the United States, with the increase in interest that we've seen since the beginning of the year, that's added about $400 per month in their mortgage payments.
I bet you
just since this year.
Yep, I bet you that's incredibly accurate. And then if interest rates continue to increase, it doesn't help the problem.
Right. So I mean, it seems like we're probably going to hit some leveling off. That's kind of what I'm seeing, but obviously none of us have that crystal ball. Everybody wants to know what the future holds. Nobody knows, but
The hope is it's a smooth off ramp and it just flattens for a period of time until we can get into our next economic upcycle.
right.
What we don't want is, continued frothiness within the real estate market and then a steeper decline on the back end.
Which we were talking earlier, neither of us kind of see that coming. I mean, I think long gone are the days of being able to buy a house for $150,000
Yep.
in Boise. I mean, we might see a dip a little bit, but I guess it's a question how big that dip is going to be. I don't think it's going to be so significant that it's going to, lead to what we saw. Well, how many years ago was that? 15 years ago.
Mm-hmm. No, I agree. I don't think it'll be that bad. I think we'll see a leveling off of the pricing, the market pricing. Volumes may slow along
Right.
with that. I think naturally they would. But if the pricing stabilizes and maybe increases, 1 to 3% a year, something that's a little more historically normal, that gives wages the opportunity to catch up. We can get rid of some of these supply chain issues and the inflationary pressure it places on goods. And so, down the road, buyers come back into the market and can actually afford a payment.
Yeah.